today we're going to be talking about mostly SPX credit spreads, but I'm also going to be sharing futures trades, micro futures trades, and wheel trade. And also we have stock picks now that we're putting great stocks into a portfolio little by little, and we'll be sharing about that, talking about that as well. Okay, towards the end of the session today, I'll also be talking about how to break the barriers that lead to trading consistently profitable. Right, really, really important that you stay to the end, because those are gems that you really, really need to listen to. Just take in, my many years of experience of losses. not afraid to say that, but finally got to a point where things were very, very consistent. And it doesn't mean that you make a ton of money, in a very short period of time. It means that you're taking measured risks with high probability trades and getting them right over and over again. Okay, and there are some losses, to be had. All right, and that's just part of the game. All right, so please stay with me to the end. The session today may change your life, your trading life forever. All right, so stick with me here. Okay, so let's get started. What can you expect? Today, I'm going to show you how you can make consistent returns monthly based on margin capital at risk using high probability trades without taking large losses, and make those returns month over month. That's the goal, right? So what are you going to learn? Basically, how to select options, the credit spreads before the market opens in terms of 0 DTE, and then other types of trades, at the right time. Okay. And we'll be talking about that. Again, I just want to make sure I'm going to be answering all your questions, at the end. There's a lot of information, so I want to cover it all, and then I'm going to get to your questions. So write them down and make sure that you have them. All right. Okay. Let's get going here. Basically, how to enter and exit your trades, how to prevent large losses, which I mentioned earlier, and have a general understanding for when not to trade. Okay. And then the goal here is how to trade consistently profitable. And again, I want you to stay with me in the end. I have a special bonus, and stick with me, and it'll pay off for you. I guarantee you. All right. This is a time also you want to clear all distractions. I'm going to be covering a lot of information. I actually recommend that you take notes, right? And write down your questions, as I mentioned. That way, when you write and you listen, it sinks in better. Okay. That's what the experts say. Okay. All right. So again, we'll answer all your questions at the end, but I want to get through all the points. All right. So the first thing is, the question is the reason that you're here, right? And I put 3 questions together, basically, or 3 thoughts that why you would be here, based on my own trading background and others that I've talked about. Number 1 is you're interested in learning new strategies that'll take your trading performance to the next level, so that you can finally leave your 9-to-5 career behind. Okay, this is obtainable, right? It's not pie in the sky. You've seen, heard about, read about others making money trading, and you know how to do it, but you're just not seeing your account grow fast enough. So that's reason number 2. Okay. Reason number 3, you tried different trading strategies that you thought, okay, this is it, only to discover that it's not getting you to the place of consistent trading results. So now that I've gone through this, right, I want to see some hands here, right, or in the chat, for which one is most closely linked to you. It can be 1, 2, or 3, or all 3. So I'm just looking for you guys to be awake and listening. Okay, great, all 3. Yep, that was me for many years. Okay, 3 out of 3s. Number 1, great, awesome. Okay, it's always good to learn. As a trader, you always want to be learning. You always want to be tweaking your trade plan. Market conditions, things change, right? So very, very important to keep learning. All right, thanks, guys. Perfect. I get the picture. Got it. Got it. Yep. Okay, I just want to let you know I'm not a guy that drives Lamborghini every day. I'm just a regular guy. That's me and my wife on the left. We live in Puerto Rico. Great life here. Those are my kids in the middle. That's 4 out of the 5 that I have, and my parents on the right-hand side, and that was during an MBA event that I did. All right. Okay, so just a regular guy. Okay, so let's talk about what we want to have as a mindset. Okay, and as a trader, you want to have a very, very positive mindset, right? So the first thing I want you to imagine, right, how it would feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time, right? That's number one. So let's go to the next one. Becoming the trader that no longer takes large losses, but consistently trades according to a proven trade plan that is profitable over time, allowing you to grow your account month over month, right? So that, that mindset is very, very, very important. And I would take that, put it on your monitor, paste it somewhere so that you're always having that positive, right frame of mind, because taking a loss and taking a big loss can really knock you out of the game for a while, and it puts you down, and that really, really affects you as a trader. So emotions have a huge part to play. Okay, so let's have a positive mindset. You take a loss; it's part of the game. You move on. You forget about it. And move on to the next trade. Right? Very, very important. Okay. All right. So let's go back now into the the nuts and bolts of this session. All right, let's talk about what really is a credit spread. A credit spread is a combination of 2 puts or 2 calls where the put and call is sold is more expensive than the put or call that is bought. So basically you receive a credit, and that's why it's called a credit spread. All right, so this is an example of a credit spread. It's a put credit spread, so it's a bull credit spread, right? These are placed below the market, and what you're receiving there is a 45 cents, which is a difference between the put that you bought and the put that you sold, right? And that's what you receive, 45 cents. Now, keep in mind that these are high probability trades, but they're very high risk trades as well. The risk reward on this trade is horrible. It's the worst. Okay. However, that's how the trade works. You give something to take something, right? It's considered a high probability trade. So let's talk about the risk reward, right? So in this particular example that I gave you, you're selling the 30-10 and buying the 35 put for 45 cents, right? So the risk reward in this case is $5,000 minus the $450 credit that you received. That's your max loss. You could, on this trade, you could lose $4,500. Okay. And I've done it. It's happened to me. All right. And so you have to understand and be cognizant of how risky this trade is and how important it is to manage it. And we'll talk about management in a bit. So let's talk about why it's such a high probability trade. Okay. This is an actual review of how options decay, right? So in the first 68 to 33 days, the rate of decay is 34%. So that's basically the how, all things the same, implied volatility, market downturn, all things the same. The decay is around 34%. Okay. From 33 days to 5 days, the rate of decay is 57%. You see where I'm going here? 5 days to expiration, the decay is 100%. So the greatest amount of decay happens in the last 5 days of trade. Okay. That's why with the will trade, I trade weeklies. With SPX trades, a lot of my trades, I trade weeklies, right? Because that's where you gain the greatest amount of decay. So that's working for you. And that's why it's a high probability trade. Okay. So keep that in mind. And that's why we don't buy options, we sell them. Profitability factors, there are 3. First one's implied volatility. So the ideal setup is when volatility is moving lower while in a trade, and then placing the trade when volatility is high. That's the ideal, right? So you want to enter a trade you're selling with higher volatility and buy it back when the volatility is lower, right? That's one profitability factor. The second one is theta. Theta is the rate of decay. And so what we just talked about. So theta is a measure of that rate, right? And it's a big factor for 7 DTE and monthly, right? And the third one, of course, is market direction. And so market direction does affect us, but you have to keep in mind that the market moves mostly up, right? And it spends a lot of its time, probably 2/3 of its time, in a range. So it stays in a range. Most of the time it goes up, sometimes it goes down. Okay. So we're taking advantage of that consolidation that happens over and over and over again, right? We're taking advantage of it. And that's what happens when the market stays a little bit stagnant or up, right? It's just eating away at that premium, and eventually you close it for a profit. And it happens over and over again. So now let's talk about a little bit, very, very important, about risk guidelines and daily routines. Okay, I'm going to go through this pretty quick. Always trade with a plan. Always have a plan, right? That you can always go back and refer to. Determine max loss and risk reward. We talked about that a little bit. Trade no more than 20% of your credit margin on your trading capital. Okay, when you're entering a credit spread, you're gonna eat up a lot of your buying power, right? That last trade that we talked about was basically $5,000 in margin that you have to set aside in order to trade that. So keep that in mind. When you go to adjust the trade, you need additional capital, and that's why I don't like to go above 20% on my account. Do not allow more than a 2% loss. A lot of traders say 1%. Okay. But with credit spreads, because they're highly probable, I give a little bit of an extra room there. Okay. And then we'll talk about how to adjust these things and when and the reasons. For a highly trending market, position trades to follow the trend. Again, where does the market move mostly? It moves generally higher. So what kind of spreads do I mostly put on? I mostly put credit spreads. Okay. Those are bull spreads. So I mostly put on those types of trades. Very seldom, actually, do I put on call credit spreads, except for like now when the market has really been extended. Then I'll put one up there, and I'll use a delta of like 5 or 8 or something like that. Okay, just to capitalize on that. I never hold short-term credit spreads overnight, and I mean like one day, and no more than 1 day. And I usually like to close them like 3 days before. I put them out 5 to 7 days and try to close them, and it works out. Okay. All right. So pre-market, this is pre-market routine. Review the areas of support and resistance. Support and resistance as a trader is very, very important. So not diagonal lines, straight lines, actually horizontal lines across, right? As far as looking at support and resistance. I look at 10-year treasury notes. Today it's higher, right? The market it's gotten a little bit spooked today because what happens? Well, when treasuries go up or rates, when treasuries go down and rates go up, right? There's more competition for dollars in the treasury market. Okay. I review ES futures, and those trade all week long through the night. Just with a break in the middle from 5 to 6 p.m. basically. Review the VIX levels. The VIX is the SPX volatility indicator, and so I'm always looking at the VIX and where it's going and what it's doing. Okay. And determine credit spreads positions and save them into my account. I do that because I want to have them in front of me, knowing what I'm going to trade, and not have to think about what position to put on. Just wait for the trigger and get in. Post-market routine: determine if rules were broken and why. Determine if risk reward was within acceptable levels, especially for wins. And I say this for wins because a lot of times you can make a mistake and get lucky and win, and I'll tell you what, it causes you to become complacent. And you think you can do it over and over again. And I guarantee there's probably most of you in here that has gone through that. Okay. Because it happens to me all the time too. And I have to think, oh crap, I got this win. I was really lucky, and I say, go back to the trade plan, and think about it, because I don't want to become complacent. Determine if losses were within acceptable ranges, right? So even for losses that are small, you might have a fear issue, right? If you take a big loss, and it happens to me again, you take a big loss, you want to go back and say, no, I don't want to, I don't want to put on a big position. I want to take the profit early. Well, if you're taking your profit early over and over again, it does affect your account negatively, right? Because you have to account for your losses. Determine if tweaks, determine tweaks if adjustment tweaks adjusting to the trade plan is necessary. Okay, so I'm constantly looking at my trade plans and figuring out if there's a change that's needed, and then update your journal with findings. All right, so let's get into zero DTE. Zero DTE is the highest risk trade, and I'll be honest with you, I'm not liking this trade that much, but I do trade it, and I know that once I get through this adjustment period, that I'll do fine. Right? It is a good trade because there's no overnight risk in it, and you're in and out, and you don't have to think about the rest of the day. Okay, so that's why. So before we get into zero DTE, let's talk about pattern day trader. Very simply, it is the buying and selling and buying of the same security in the same day. These trades cannot be done more than 3 times. So if you do 4, you're subject to restrictions on your account. You don't want to get there, right? So what I recommend is obviously, if you have an account that's over 25,000, that's key. You can day trade all day long. You don't have to worry about it. But if you can't, there's alternative ways to manage it. Okay, limit trades to 1 trade 3 days per week. And so if let's say you put on an iron condor, okay, and you close that iron condor, or you put on the iron condor and you close each of the trades individually, that's 1 trade. All right, that's considered 1 trade because you initiated the trade by 1 trade, and then you're closing out 2 legs, and that's considered 1 trade, right? So, but if you put on 1 leg and then add another leg and then close each, that's 2 trades. So just keep that in mind. And if you have a question, talk to your broker. You don't want to be restricted. Okay, you can manage trades from multiple accounts. So some people have cash accounts, IRAs, margin accounts that they alternate to and from so that they can use up day trades and won't get pinged. Trade wider iron condors, allow them to expire. I don't like doing that, but it is one way to do it, and I know traders that do fine doing this. Okay. And then you can also trade ES futures, use credit spreads there. They're not subject to PDT. Okay. All right. Some alternatives. There's probably more, but I'm giving you some ways of avoiding getting flagged or restricted on your trades. Okay. So now zero DTE entry. I like to enter within 5 to 10 minutes of the market, sometimes even less. And today I got in with less time of that. Right. So you can use 5 wide to 15 wide. I know traders that even go further than that, but after, there's a diminishing return once you get past 15. All right. Using 5 wide spreads requires better understanding of market direction just because you're going to be closer to the market. Using 15 wide allows you to have additional distance from the market. And of course, using the same delta between the two. All right. Okay. Again, write down your questions. I'll answer them at the end. I want to get through this because we have a lot of information. Premium I use is between 35 and 70 cents. All right. That's what I use for my trades. It's usually a delta between 5 to 10. That's what it comes out to. Right. My take profit is 20 cents for a range market, 10 cents for a trending market, expiration for a 15 wide spread, or getting the direction right. So if you're using one side and you get the direction right, you can let it expire. You should be fine. But a lot of times there's a lot of market movement that happens at the beginning of the day and at the end of the day, right? And I have some examples of that. So market exit stop loss, market moves immediately against you and the trade continues after trade initiation. You just, the best thing to do is close it out, forget about it, because generally a market once it starts going in one direction strongly, it could continue going. It could, and I'm not saying it always does. It could. Then it's going to eat up your position, and you never want to let that position be breached. Okay. Identify breaks and support and resistance in a 5-minute closed candle. Now I give it a little bit of room because traders like to take out stops, right? They go in, they buy them up, and then they get a nice trade in. And so you want to wait a little bit before you close it. So I do use support and resistance areas, or if the price action is not to my liking, I just close the trade and move on. Okay, there are better trades out there that I can do. All right, so let's talk about a trade here. Let's see, did I move it too fast? Yeah, I did. Okay, a little bit. Okay, so this trade here, I put on, and this was a $29.95 3,000 call spread that I put on. The market went up, as you can see. Premium moved to 70 cents. But if you can see here, this area right here, I had identified as an area of resistance. And you can see, and later in the day, that it bounced off of it, right? It moved up against it, bounced off of it, but then it went right back up, right? But in this particular trade, I held on, right? Let the market go down, and I closed the trade for 10 cents. This market continued to move higher, right? And the SPX was 990. Well, it's only 5 points away from the 5 points away from the short leg. And so you would have been sweating bullets. And I'm sure if some of you already trade 0 DTE, you know what that feels like. And it's just not comfortable. I'd rather get out at 10 cents and not have to sweat whether I'm going to get breached or get caught in here. And for your information, this event is live. Okay. The person now listening on the recording is not going to be live, but this event is live. I'm just letting you know. All right. So one thing I want to instill to you is that time is actually risk. All right. So the longer you stay in a position, the more risk you obtain. Doesn't matter what trade it is. Okay. So even right before this session here, I had some wheel trades and I saw the market going down and I got out of them because I had a nice profit, and why take the risk? Okay. So let's move on here. All right. This is another trade, 0 DTE. So this was 28.85, 28.90. And you can see here that the trade slowly moved against me, right? And this is a 1-minute chart, I believe. It is 1-minute chart, right? So and there at this time there was a lot of volatility. Let's go back here. But what happened was, and I want to share with you, this is an indicator, okay? Obviously going up, and here on the RSI it's going down. This is called convergence. So it gives you kind of a heads up that you're losing momentum, and it allows you to, it helps you allow to stay in a trade. Right, and that's why I'm sharing it with you. Okay, here's the trade at the 5-minute chart, and you can see how it went up here, and then started going down. Right, so that was on the S&P 500 to 28.79. So we were pretty close to it, but managed to get out of the trade here. So, and this is another thing. This below here is implied volatility. You can see that most of the day it was going down, right? And even as the market was going up, that particular call spread was losing traction just because the volatility was actually going down during that period of time of the market. And so you can see here that we had lower lows, okay, as the market went on. And so that gave me a signal that, okay, it should be okay to hold on and keep moving. So these are just a couple of examples of 0 DTE. There's a lot of other examples that I have in my YouTube channel that I encourage you to check out. Right, 7 DTE is the golden nugget of the SPX trades. I love this trade. So, and this, I had a pretty big loss about a year ago on 7 DTE because I was testing it, but I really didn't test all the market conditions, right? So I would put on larger positions on one expiration and just manage that and just leave it. And so now what I do is I put on much smaller positions, and I spread it out into different expirations. Big change in the trade plan, huge results because of it, right? One small change can make a huge result in these trades. So when do you want to put it on? Again, when we have an increase in volatility. Today was a good example where the market went down. Probably would have been a good time to put it on. Okay, I was preparing for this session here, so I didn't get a chance. Hopefully, I'll get a chance to put one of these on, because I only have one on right now. All right, I use a delta of 10 to 12 for bull spreads, and 7 to 10, and sometimes even less for bear spreads. Again, I don't like bear spreads. They're harder to manage. As the market goes up, the volatility goes down. You have less room to adjust it, and it can just be a nightmare when you're trying to adjust those trades. Okay, so at first, always trade PCSs, not CCSs, and you will thank me for it. I guarantee you. Okay, an acceptable profit is 50 to 80% of the credit received. Okay, so so if the market conditions are favorable, right? So I actually take usually in the 80% range, 80 to 90% range. Okay, and then for positions that have been rolled or adjusted, profit target should be 20 to 50. And I say that because when you adjust your trade, you're not probably going to put on a 10 delta trade. You're probably going to put on a 20 delta or a 25 delta, which is fine, right? Because the market has moved in a certain direction and probably extended. So, but keep in mind that you want to take your profits early on those, so you don't get into trouble and get caught managing a threatened trade, right? I try to avoid it. I know how to manage the threatened trades, but I try to avoid it as much as possible. I initiate the roll within 20 points, and that's when volatility is lower. Right now, it's a little higher. It's higher than 20. So I like to roll the position when I'm about 40 points away. All right. And I need to clear up the slide. So hopefully you remember this in the recording. But if we are above 20 on the VIX, you want to use 40 as your guide to get that adjustment going. Okay. Stop loss, no stop losses on these. I roll them. That's it. Sometimes I will sometimes I will take off a call credit spread, let's say, when the market's going up and I may have a small loss. I'll just take it off. I don't want to worry about it. And that's fine too. Okay. No big losses. That's all. No big losses. All right. So I'm going to share with you an adjustment process. I'm going to walk you through it. Okay. This is good for the monthly trade as well. I'm not sure if I'm going to be able to get to that all the way through it, but we'll try. All right. So here's an actual trade that I put on a while back. All right. This is a 5 wide. And I put on the put spread for 45 cents and the call spread simultaneously on the same day for 40 cents, right? So the call spread was a little bit lower delta. Okay. So what happened? Next day we went up quite a bit. 20 points, and I said, nope, time to adjust. And so what did I do? I first adjusted the call spread. And so I took a 35-cent loss, but is it really a 35-cent loss, right? So some people say, oh, you never roll a trade until you have a credit on it. That's bullcrap. Okay. That's you want to adjust for risk, not for profit. You adjust for risk. Keep that in mind. Okay. So you don't want a breach trade. And so that trade, if I would have tried to adjust it for a credit, I probably would have been 5 points above instead of the 20 points that I used, right, to manage risk. But the bottom one, you notice that I rolled up. And these are the put credit spreads are much easier to manage because they have a higher premium, okay, and more volatility. And so I did move this one up from 45 to 55, not a lot, right? Only 10 points, but I collected 30 cents. You see the difference? 35 cents on the call spread, 30 cents on the put spread for, half the position. All right. So I hope that makes it very clear, on the adjustment process. So what did I lose here? I lost 5 cents overall, right? In the end, I closed the trade for 10 cents on each side. And so let's go through it. Collected 85 cents at the beginning, paid 5 cents to roll, right? If you consider both sides of that trade, and I closed the trade for a 60-cent profit. Okay. I did not lose on this trade just because I rolled it for a debit. Keep that in mind. You're always rolling and managing for risk, not for profit. Okay. So I'm going to walk you through a few, a couple examples here of this. This is a trade that I actually managed in April. I think there are 6 trades in all of this, and I'm going to walk you through it, how I manage these. Okay. First one, put on 25.20, 25.15 put spread, 50 cents, right? Then I actually closed that trade for 5 cents, and I put on another one for 50 cents, right? You have all the data here. So when you go back in the recording, you'll be able to walk through it and you'll see how it works out. Okay. I'm going to kind of go fast through it. All right. So I closed out the first trade. Then I put on a call spread for 55 cents, right? And I closed out the second trade for 5 cents. Third trade, put on 26 put spread, right? It went up. I was able to close the trade at 15 cents, right? I didn't wait for 5 cents. Now you can see here the credits are adding up. Okay. So then I put on, I did a vertical roll on this one. So I rolled the trade for a net debit of 15 cents. And I put on a put spread for 55 cents. Okay. Then what I do, I closed the third trade basically. And then I was able to put on another put spread for 65 cents. Okay. And I closed both of those other trades for 10 cents that I had on. Okay. The one that I rolled and the one that I put on. Right. Then let's see here. Close that trade. Okay. And then I put on the 50 cents and I closed the put spread for 15 cents. And I think, yes, I closed it. I closed that trade for 15 cents. So at the end, I collected through the month $255. I had a couple debits in there, but overall, it was a very, very profitable month, right? And this, we were at a time, it was April. And so we were in a time where the market was finding its footing, okay? Finding basically the bottom. And so I capitalized that using both sides because I didn't know which way the market was going to go, honestly. And if you think you know the market, where the market's going to go, you think too highly of yourself. Even the greatest traders don't know where the market's going. All right, so let's get through. I think I have a little time. Let's get through the monthly trade here. All right, monthly trade is a very sweet trade especially if you're career bound like I was for many, many years. I only traded monthlies, and they worked fabulous. All right, because I didn't really have to look at them every single minute of the day. All right. So again, these are, I'm just going to go through it. These are just like the 7 DTE, same deltas exactly, same take profit, same exactly, just like the 7 DTE, except that I use a 2.5 to 1.5 threatened short strike, for adjustment. Probably a little more in higher volatility environments. Okay, so that's really the difference on this one. And you want to adjust these early and often. And again, I don't use stop losses for these. I roll these. Okay, so very, very similar to the 7 DTE. So let me walk through you. Okay, walk through this actual trade. This was December, a while back, 2018. I guess I should update this, huh? But I haven't actually done a lot of adjustments on monthly trades for a while. Okay, so trade moved against me, went down. So the premium went from 35 down to 90. Then what did I do? I adjusted, right? So we were down at that level. And the first thing I did was, and especially if you're trading bigger positions, you're not going to be able to roll both sides because you may not have enough margin in your account. So what I do is I close the position before I adjust it into the next month. So in this case, I closed the non-threatened position for 5 cents, bought the 24.15, 24.10, bought it for 90, and put on the 23.40, 23.35 at 90 cents, right? So it's basically a wash for those 100, almost 100 points down, right, into the next month. So a debit of 0, and the specific trade is this. It's actually a vertical roll, okay? And what I did was I sold the January 26.55, 26.60 for 50 cents, and got a credit of 45 cents, an additional credit of 45 cents. So I ended up with an with a $1.15 instead of the 70 cents originally. So I actually made money on it. Okay. Doesn't happen often, but it does happen from time to time. And this happens actually more frequently with monthly trades than any other. All right. Okay. And this is what I ended up with. All right. So let's talk about a little bit about technical analysis. I'm going to cover this. It's not in great depth, but it'll give you a good start into understanding fib levels. All right. And I think I saw a question about fib levels here. All right. So I do put on fibs from the high point to the low point in this particular chart. All right. So you can see where, and I put it on after the market had hit the low of 27.30.25 and moved up, and you can see here that we had a double bottom on that green line there. Okay, and those lines are IBL levels, and I'll talk about that in a little bit. All right, so so you can see here and follow this where the support and resistance levels are. Right here at the 23.6 level, it went up to the 61.8 level here, down to the 23.6 level, and found support. And then it started moving up, and it went up past the 618 and stalled at 786, right? And you see this monthly candle, this 5-minute candle here, broke it, went back down, false breakout, and it started going down again. All right. So you can see how the fibs, when drawn out beforehand. Now, whether this is a natural occurrence in nature, right, or whether traders are actually following these, and putting their positions around those support and resistance levels, it doesn't matter. It works. Fibs work. Okay. So I'd encourage you to learn how to put on fibs and manage them. And there's 2 types. There's retracements, and those are the main 2 types: retracement and extensions. And I use extensions a lot for futures trading. Okie doke. So again, there's convergence here, right? So you can see here where the market was going up, and on the MACD, there was convergence, market going down. Okay. These are support and resistance levels using trend lines. It's just another form. I don't like trend lines because they're very biased to the trader. So I like horizontal lines because that gives you the best support and resistance. But in any case, you can see where this is an hourly chart, that the market went down, and you can see where there was support, right? Broke through that support, and then consolidated, and that support became resistance. This happens day in, day out. Very, very, very continuous patterns that occur all the time, right? When you break the trend line, it breaks, basically you're breaking resistance. And then, because you had a higher low here, it's basically a reversal pattern. Okay. So these are great to know for futures traders, and we'll get a little bit more into futures in a second here. Okay. All right. Keep those questions warm. I'll get to them, I promise, at the end here. So I think we're good on time. All right. So let's get into a little bit of futures trading right now. This is in Thinkorswim. All right. And these are the actual margin requirements per contract for micros. All right. And these are the multipliers. You can look at that and study that if you ever go into futures. But for retail traders, micro contracts are probably the best thing out of, outside of 7 DTE for a retail trader to use. They are amazing leverage tools as you use them, because these patterns that occur over and over again, all you have to do is learn them and you will make money. Okay. And I actually made a lot of money trading micros, way more than I ever thought that I would. And so I really encourage you to use them, but do not use Thinkorswim. And I'll tell you why. The amount of margin that they require is 1,200 for MES and 1,760 per contract for Thinkorswim using TD Ameritrade. Okay. The good news is that Tradeovate, the broker that I now use, only requires $55. Compare that to the amounts I've listed here, right? Tradeovate only uses, and this is for day trading, right? So you have to close your position at the end of the day, okay? Or else it goes into overnight, and then you do have to put up a lot more margin, right? But for day trading, $55 for MNQ and for MES, amazing, right? Hardly need any money to trade these, but learn before you earn. Do some paper trading on these because it just like you can make a lot of money, you can lose a lot of money on these as well. All right, because they're leverage instruments. All right, so let's talk about a little bit of tactics or strategies on using this. I always annotate the IB levels, and this is the initial balance, and this is the initial balance forms between the first hour of trading. All right, so from 9:30 to 10:30. You mark the high point and the low point that it made during that period of time, and these are great ways to trade. And you can see here on this one that after 10:30, right, it broke, but then it had a false breakout, and it was like a perfect short right there. Okay, that's just one example, and then I'm going to go on to show you here using the IB levels. And using it for a trade. So this is a different day, right? So here again, it consolidated above, thinking that it was going to go higher here, and that's why you want to wait for it to come back and break out, right? And trade the breakout in that case. This case, again, false breakout, went back down, perfect short. All right. Okay. Let's go on here. Here's the way that you want to initiate a trade, okay? And you want to wait until you find a bottom. Finding tops are a little more difficult, actually a lot more difficult. But finding a bottom is much easier, right? So let's go through this. Okay. Here we had a bottom, first bottom, right? What happened? It tested, failed, right? Now we have another bottom. So the bottom is not in yet. What happened? It tested there, it failed, another bottom. And then finally, we got to the IB low. That's that white line, right? It failed after this one, but once it tested that, we found a bottom, right, at 11,096, which is actually right at 10:30, right when the IBL forms. Okay, so you want to wait a little bit, and it's okay especially if you're scalping. I do mostly swing trades. But if you're scalping, this is a great tool to use. Okay, so there was a test there at that point, and there was a reversal there. All right, so the market went up, and let's see. So here again comes in convergence. So we had a RSI that was moving up gradually, and a market that was moving down. And it gives you it's not it's not an end all to put on your trade, right? But it gives you more confidence that, okay, this thing is losing momentum now, and it's time to put on that trade, and you can put it on for a small loss, or a short, basically a stop, a tighter stop, and get in that trade. Okay, all right. So let's talk about looking at the market and finding lower lows, higher highs, lower highs, higher lows. Right. In this case, these are higher lows. Where it keeps you in the trade. Once you get, and these are higher highs, okay? Once you get past that, you have a lower high. Now you've got to be suspect to it. and then you have, let's go back, and then eventually you have lower lows. Okay, so you want to get out of that trade at that point. Just another example. Okay, this is a fib retracement that I showed you earlier, and fib extension. Okay, so you see the points there, point lower, higher. It's actually not a great fib extension because you want to have that second point, because you have the A, B, and C points, right? You can see the triangle there. And then the D point is up on top where it's the 100 or 125 level. And I actually had this trade on and I got out at 100. So these are patterns that form over and over again, and use fib extensions in this case. Okay, A, B, C, D up there, right? That's a fib extension, and it's an ABCD pattern. All right, so I'm going to get now into a couple other trades that we're using. These are stock picks. So in our group, basically we're now creating awesome portfolios. So this is a portfolio that I put on 9/15/2020, and you can see there that it did real well. Okay, yeah, the market has been going up and up and up, right? But we also did have a 5% correction. But these are high quality stocks. Some of you may not think so, but looking at the earnings per share, et cetera, all the fundamentals and the technicals of these, we're working to create really good model portfolios. Okay, that's one trade. Now this is the trade. The wheel trade is the one that I'm super excited about, because this is a phenomenal trade, and I'm going to share with you how best to trade this, right, from what I've learned over the past couple of months. Okay, so I put my put spread experience to this, right, and my understanding of technicals and finding a bottom. And so so this is basically the trade plan, right? Not in complete form, but the goal here is to sell cash secured puts on highly quality stocks, right? That's really the goal. You find high quality stocks, not crappy ones, just because they have a lot of volatility and they're moving up. But you want to find a stock that you want to own, because in the wheel trade, you're basically putting on naked puts, and possibly getting assigned. Well, since the I'll show you my performance there in a second. Okay, the goal is to collect premium and not get assigned. So you don't want to get assigned, right? And I've had a couple trades that I've had to roll a couple times so that I won't get assigned. And funny, because I was able to roll them for credit each time. Okay, if I wasn't able to roll them for credit, I would get the assignment and then start putting on covered calls, right? And that's really the wheel trade. So for those that with less capital, what we recommend doing is buying the lower strike put and creating basically a put spread out of these, right? Much less capital intensive, and the guys that I trade with love it, just love this trade. Okay, so when the position is threatened, it's rolled for a credit. Okay, and again, if I can't roll it for a credit in this case, right, I will allow it to get assigned and then start doing covered calls on it. But remember, these are high quality stocks, so I don't mind owning them, right? And these positions sometimes were even in the money when I rolled them, and it worked out really good. So you collect premium over and over again. The strategy works to reduce risk of assignment, and if assigned, it will be a stock that favors ownership. Awesome trade, love it. Okay, so this is the stats on it. 28 trades closed with one loss of $6, and that was apps. And the reason that I closed it was because I made a mistake of putting it on, because it was in the week that it had earnings, and that's one of our rules. We do not put trades on that have earnings within the expiration period, right? So all trades sold one contract. So I was only using one contract, with the exception of one trade. I used two contracts, which I just closed out before this session. The max number of trades that I open at one time is 6, and that's because of capital requirements, right? So I don't want to have 6 stocks having more than 6 stocks me having to buy if we have a downturn, right? So that's one of the rules I have. So the average days held is 5 days. I couldn't believe it. So I'm putting on these weekly options, and I'm actually taking them off all within 5 days. The P&L for that using one contract over almost $1,300 in a month. It's just unbelievable to me. So this is a phenomenal trade. Oh, and by the way, we went through a 5% correction while I was trading this strategy. Okay. So again, using really, really good stocks is really the key to this trade. Alrighty, so that's covering all the trades. So what I want to get into next now is how to trade and break those barriers that you have. Very important, right? So we're here as traders to be consistent, and it takes a while to be consistent. But I'm telling you, there's a fast path to it, right? And I really believe that we have the ingredients for doing that. So the question is, do you want to follow our trades while you learn using basically the 6 strategies that I've outlined and be a consistent, profitable trader? Of course you do, right? Of course you do. So, when you guys first came on, you're interested in learning new strategies. Maybe you're not seeing your account grow, and maybe you weren't finding the right strategies, right? I'm telling you, what we're doing is we have the right strategies. We know how to grow an account, right? And we know how to teach you to get there. It's not 1 week. It was 1 month. It took us 1 month to get that. I just looked at actually it's a little bit more than 1284, but I started on the 28th of December to today. Okay. So it's a little over a month. Okay. So, success, right? How do we break the barriers? The question is, will you keep doing what you're doing and hope that one day something will stick? And hope should never be in a trade plan, guys. I'm telling you, it should never be in a trade plan, right? Or will you finally take the steps that will get you to the place that you want and that works over and over again? Okay. It takes discipline. It takes commitment. It's not only learning, training, instruction, practice, right? But also discipline, commitment, having an edge, and a no quit attitude, right? So when you take that loss, you say, okay, it's a loss, move on. I have other trades and they're going to make money. Okay. This is success. This is what we call success, right? So we have, I want to share with you our SOS trade alerts. And now we have incorporated all these strategies so that not only can you trade, but you're also going to be able to start building your portfolio little by little. Okay. And that's really my goal for the traders that I want to help. Okay. It's not good enough to be a great trader. You have to be a great trader and you have to be a great investor, right? If you want to build wealth for you and your family. And that's what really counts, right? So these notifications come sent directly to a phone or computer. We use Telegram, which is extremely fast, faster than text and email. Okay. And you can use them on a Mac, you can use them on your phone, any kind of phone, computer, etc. And they all sync up together. They're basically, what we're doing here is getting started, successfully, ready to expand the strategy. So trade alerts will help you trade at your highest level, and it's designed to transform your trading from uncertain to predictable and teach you how to generate those returns. Okay. We have different rooms and channels. We have live chat, subscriber chat. We have one more chat group as well. We segment those chats so that we make sure that there's not a lot of noise, okay, in getting the trade alerts. The channels basically are rooms that are dedicated to just getting the signals out, right? And they, most of the signals are from my account directly. So as soon as I put in the trade, it goes right into the channel. We have that automation, right? We have great success stories. You can read them here on your own here. And tons more than these 3, right? People making great money. But it's not just about making money. It's about learning. And actually right now we're in the process of creating a very, very formal education process. Okay. We're going outside of Telegram to put this together so that we can teach you ABC of fib extensions and retracements, Elliott wave, all the technical tools that professional traders use. We're going to incorporate into the service so that it's not only getting the trade alerts, it's learning and allowing you to become independent. A lot of services don't want you to get independent because they want you to rely on their trade alerts, right? What I want is for you guys to be independent and stay with us. But a lot of guys stay with us for 4 or 5 months. They learned what they learned, right? They become independent and they just want to trade on their own. Great. That's fabulous for them. A lot of guys stay with us, and we've had people for over 2 years with us. Okay. And just because it's just a great environment for not being completely segmented and isolated as a trader, because that's what can happen. Okay. Agree. I don't want to trade alone either. Right. So I am so confident that you will win, that if you subscribe with us for 1 month and lose money, I will give you back your refund, refund of the service plus 25%. That's my guarantee. And you know what? I have never ever had to come have to deliver that before in the 2 years that we've had our service. So right now we are giving you, this is the normal price plan of our service, $59.99 and $129. Okay. The day trader, we've added the wheel trade in here in the day trader plan, and we have Ike's trades, and that's a 20-year trader that I traded with. He's a professional trader. He is amazing with Elliott Wave. We have market briefs in the morning that he gives, and he's just solid, just a solid trader, and loves doing diagonals. Okay, that's part of the 59 plan. However, if you guys decide to join today, okay, the price is not $59.99 and $129. It's $39.79 and $109. Okay, so this is basically the this is basically the package that that we have. And if you decide to join in the next 3 hours, we'll keep these prices in, right? This is the price that we had for the waitlisters. We've got about 50 members out of the from the waitlisters, and we're giving you the same deal here. But in 3 hours from now, the prices go right back up to the same amount. Okay. And the reason I'm doing this is because I want you to make a decision. Even if it's for 1 month, I am telling you, it can change your trading life forever. It is a comprehensive service, and not to just take money from you. It's really to make you a proficient, strong trader, independent. Okay. So let me put out the offer here. I'm going to put it up. Broadcast. Okay. So I think if you click on it, it'll take you right to the web page. Okay, for that. So and I'm going to talk a little bit more about the course here. So we have a trading course that's part of the package. It's not part of, well, it's part of it, but there is an additional cost. But I highly recommend that you take this course. Talk about the psychology of trading. Talk much more in depth for what I've talked about today. These are the trade strategies that I use day in, day out. What's not included is the wheel trade and the portfolio. However, again, in the room, we're going to be putting those education and training sessions together. So what does it cost? Basically, it's a $397 value. And why is it a $397 value? I used to do one-on-one mentoring for the SPX credit spreads. I actually had a lot of students at $800 doing one-on-one with them. Okay. Then I went to group coaching, $400. I just didn't have the time to do it anymore. The course value is $397. The regular price of the course now is $149, and you can get it today for $129. Right. So we're giving it to you for $129. It's a really great value because it puts all of this together comprehensively, and it shows you how to create a trade plan and do all that stuff. Right. So the question is this for you? Do you want to learn a step-by-step process to gain income in a market that goes up and down? Do you want to finally break the series of losses and account drains? If your answer is yes, right, then, you want to give this a try, and I'm not trying to sell you a bill of goods. I'm not trying to sell you this get rich quick scheme either. It takes time, it takes work, but you get put in an environment, right, that everybody is winning. And I'm telling you, that makes a huge difference. It gives you an edge over other traders, right? What do you get? $20 off, subscribe for life, right? We're giving you that 20%, that $20 off. You're in working with professionals. A lot of the guys that we trade with are actually full-time traders, and they stay with us. They also subscribe to other services. Even Ike, that I trade with, has, subscribes to really expensive services, but he brings that information into our group, and he's pretty much full-time in our group. Okay. You get automated signals. They're integrated with the service. And you get entry price, target price, and my guarantee that you'll make money to win. Again, if you don't make money the first month, I'll give you the subscription fee back, right? Plus 25%. Okay, now I'm ready to take questions. So let's see here. Okay, somebody asked me about an account size, 3K. Is it possible to make 3K with $30,000 account consistently? 3K a month, a little tough, but it can be done. I always say between 5 and 15%, right? Sometimes you have good months, sometimes you have bad. But I'm pretty sure that you'll make 5% a month without a problem, as long as you stick to the rules, okay? Okay, earlier you stated some trades should not go overnight. How does the swing and monthly work? The 7 DTE, again, it's far out there. I usually don't put on less than a 5 DTE. And so that the nightly risk is mitigated, somewhat. But mostly it's 7 DTE, and then the monthlies are 30 days, and then futures basically trade all night long. And so there's really no overnight risk with futures. Obviously, yes, with the wheel trade, but again, those are like 7 DTE. I'll usually put on 7 to 10 days or 12 days on the wheel trades, and usually close them out within 5 days. That's been actually what we've measured. Can you show us your account without the account number? Yeah. Okay. My account is for my trading account. I can tell you right now, it's $55,159. Okay, that's my account that I use for trading. So, so that's what it is. I don't want to, I can show it to you, but I don't want to change the screen here and stuff. Okay. So, how much capital the wheel to make $1,300? Oh, okay. So I'm in a margin account, so I didn't use the full cash secured puts. I can tell you it's about 25% of each of the stock, 25% plus a little bit for margin on those stocks that I used. So I have the Google sheet. You guys should have access to the Google sheet of the wheel trades. And so just take a look at that, and you'll see the capital requirements on that. All right. What size recommendation? What size of the account recommendation? At least $3,000, probably to trade one strategy. 10,000 if you want to trade the the 3, 7 DTE, 0 DTE, and monthly, and then higher than that, probably 15 to 20,000 if you want to do everything in the account. Okay. 1 DTE trades? No, I do not trade 1 DTE trades. There are guys that do, but I do not. It's just too much risk, overnight risk on 1 DTE. Any other questions? Okay, so in the offer, you're going to go into the website, if you're interested in joining. And again, we're going to do this 1 hour. Let me see. So by 4 o'clock Eastern, the rates, the rate is going to go up to $20 higher. Okay. So if you can get in 3 hours from now, you'll get those discounted rates. And if you have any questions about joining, there's instructions on how to get into Telegram. It is a process. It's not just from the website. You got to get into Telegram, subscribe, and then basically join all of the channels that are part of your subscription. Okay. It's kind of wonky at the beginning, but once you get in, you'll get acclimated. Now, I am going to have not today, but probably, I think it's on my calendar for tomorrow. I am going to have an orientation session that walks you through the whole service, how to set the alerts correctly with Telegram, etc. And then basically then you'll get a lot more acclimated. It can be a little bit overwhelming because there's a lot of resources in there that we use, but once you get used to it, and you go through that, once you get through that, and once that'll be easy to follow after that point. Okay, let me see, please. If I open an iron condor position 0 DTE and left it to expire worthless, is it considered a breach for the PDT? No. If you let it expire, you do not get, that is not a day trade, just to let you know. It's actually not a day trade. So what can a person make? You can make, if you're managing everything correctly and following the rules, you can make between $5 and $15 or 15% a month. Not kidding. You can make that amount of money. For capital requirements, well, for day trading, you have to have $25,000 in your account, or else you have to manage your trades, so you don't get PDT. With a $10,000 account, a $25,000 account per week. With a $10,000 account, I'm not sure the question, Bruce, there. A 25K account per week. Not sure. Can you rephrase that question? How much time do I need to follow your trades? If you understand how to put on a trade, you can follow pretty quickly, right away. If you know how to, initiate a SPX trade, or, with the wheel trade, you're basically just selling an option. That's all you're doing. So it's pretty easy. Or even with 50K. I'm not sure the question still, Bruce, that you're trying to ask. Okay. Any other questions? With the large account, which trades do you typically use? 10 contracts. Okay, so I use 5. So my account, a little over 50,000. I use 5 contracts for 70 DTE for monthly. And what I do is every time, once I go up to 60,000, right, I'll use 6 contracts. When I go up to 70 contracts, I'll use 7 contracts. And that's kind of the way that I'm managing my capital. With 3K, you want to definitely not use more than 1 contract, and be very, very careful. So that's really the minimum you can use for this, and 1 strategy. You don't want to use it more than 1 strategy. Okay. Any other questions? Any questions about the service? Are you guys getting in? Because I'm not even following that. Let me see. Let's see here. Yes, some of you are getting in. Okay, I see that. Okay. Okay. Any other questions about getting in the service? All right. Awesome. Awesome. Now make sure you go through those instructions, guys. Okay. So you'll get an instruction guide on how to join the groups. And again, I'm going to be doing an orientation session. We have those out there. I think you'll be getting an email about it. But make sure that you join the orientation session, because I go through everything in the group there. How competent should you be to start using? Okay, you need to understand credit spreads, how to place them, the risk reward. Make sure you understand all of that before you start trading. Okay, and if you don't, what I would highly recommend is paper trade first. Okay, paper trade those, understand them, because they can be complicated, especially on the adjustment part. And then, that's really the hardest thing for everybody. But in the group, I walk them through step by step on how to adjust the trade. Okay, and what positions to use. Yeah, the SPX course, it does give you a thorough understanding. Will give you a thorough understanding of those trades, and I highly recommend taking the course. Okay, no problem, Bruno. We open the service every 3 months. Okay, and so this takes a lot of time, for us. So we only dedicate a couple weeks to opening the service, and then I dedicate my time to the traders. And so I spend all my time in the room answering questions and stuff, and not have to worry about marketing and trying to get people in. So that's why we open it and then close it. And it's really to have people coming in constantly, it's a disservice to our traders that want to trade. So that's why we do this. Okay, if you already joined the wait list, we'll reach out to you again. But you should see an email about the wait list soon. Okay, and if not, just reach out to me directly. I'll get you on it. The SPX credit course is $129 right now. It is. That's $20 off the regular price that we have. Thanks, guys. Thanks for helping out. Appreciate it. Any other questions? Remember, the next 3 hours, the price will stay the same. Hopefully, if you have any questions after we stop this webinar, then you could reach out to me directly. I'll be in Telegram. Yes, you can shift from one plan to the other. You can upgrade and downgrade, and I'll show you in the orientation how to do that. Any other questions? Okay, I think we're done. Again, I'll be around. Email me if you need anything answered. If you're in Telegram, you can direct message me there, and I will answer all your questions. All right. Thanks for your time, guys. I appreciate it. Have a great day, and I hope to see you in our SOS Trade Alerts. Thank you.